Welcome to The Explainer. Today we're breaking down a really fascinating update from a biopharma company that's sitting right at that critical intersection between late-stage science and aggressive commercial prep. We are talking about Mineralys Therapeutics. We're going to dive into their Q1 2026 financial update and map out their road to a potential new hypertension treatment. If you follow the biotech space at all, you already know that moving from a clinical stage company to a commercial stage one is literally one of the most perilous yet potentially rewarding phases in the whole industry. And well, Mineralys is navigating that exact transition right now. Let's get into it. Here's our roadmap for the explainer today. We'll start with the hypertension challenge, meet their drug Lorundrostat, check out the Q1 2026 financials, look at their cash runway, and finally, trace their road to FDA approval. All right, Section 1, the hypertension challenge. To really grasp what they're doing, we have to understand the massive gap in current cardiovascular care. Imagine this. We've got an estimated 120 million patients out there with elevated blood pressure. Roughly half of them, so about 60 million, are actually getting treated. But here is the absolute failure point of the current system. Over 30 million of those treated patients simply cannot get their blood pressure under control. And even crazier, 20 million of them are walking around right now with systolic levels dangerously above 140. To put that into perspective, patients who have hypertension that persists even when they take 2 or more meds have a 1.8 to 2.5 times greater mortality risk from heart disease or stroke. Less than 50% of patients achieve their goal with what's out there today. So despite the pharmacy aisles being totally packed with blood pressure meds, there is still a massive unmet medical need. So why exactly are all these current medications failing so many people? Well, a major culprit for about 30% of these uncontrolled patients is something called dysregulated aldosterone. Think of aldosterone as a hormone that acts kind of like a thermostat, but for your body's salt and fluid balance. When that thermostat breaks, your body just holds on to way too much salt and water. That drives up your blood pressure and puts a ton of strain on your heart and kidneys. It's a very specific biological mechanism, which means it requires a specific biological intervention. That brings us to Section 2. Meet Lorundrostat. Mineralys' proprietary drug candidate is called Lorundrostat. It's a highly selective aldosterone synthesis inhibitor. Going back to our analogy, if dysregulated aldosterone is flooding your system with excess fluid and pressure, you can think of Lorundrostat as literally turning down the faucet. By inhibiting the specific enzyme responsible for producing aldosterone, which is called CYP11B2, it directly eases the strain on the cardiovascular system. And you know what? The clinical data totally backs up this mechanism. Across 6 completed late-stage trials, this once-daily oral pill has shown robust, durable, and truly clinically meaningful reductions in systolic blood pressure. We are talking about a demonstrated 40 to 70% reduction in plasma aldosterone concentration in hypertensive participants. Plus, it has an observed half-life of 10 to 12 hours. That means it allows for consistent 24-hour control with a pretty favorable safety profile. Now, what I find super fascinating is how well this drug does its primary job, even when a completely exploratory trial doesn't perfectly hit the mark. Take a look at their recent Phase 2 Explore SOA trial. They were testing Lorundrostat in overweight patients who had both moderate to severe sleep apnea and hypertension. After 4 weeks, the drug actually missed its primary endpoint for reducing sleep apnea severity. But in that exact same trial, it still achieved a highly significant 11.1 millimeter of mercury drop in blood pressure. So while it might not be a silver bullet for the sleep apnea itself, its core mechanism, lowering stubborn blood pressure, is undeniably effective and consistent. Let's pivot a bit to Section 3, the Q1 2026 financial snapshot. The crucial takeaway from this financial table is this really interesting inverse relationship that's happening right now. Total net loss for Q1 2026 was $39.3 million, which actually narrowed slightly from $42.2 million a year ago. But look closely at the composition of that spend. It tells you exactly where this company is in its life cycle. Notice how research and development costs are dropping? They're down from nearly $38 million to $24.4 million. That's a $15.5 million reduction, mostly driven by the conclusion of their pivotal trial program. The heavy lifting of those massive Phase 2 and Phase 3 trials is winding down. But conversely, look at general and administrative expenses. They have skyrocketed from $6.6 million up to $21 million. This shift in spending is the classic story of a company aggressively building out a commercial team. They're spending almost $8 million more on professional fees and over $6 million more on personnel. Why? Because they're jumping into market access discussions, expanding their medical advocacy out in the field, and standing up a full sales and marketing infrastructure. They are actively transforming from a lab-focused organization into a market-focused one. Which leads us perfectly into Section 4, the cash runway. This number is absolutely key. Mineralys ended the first quarter of 2026 with a staggering $646.1 million in cash, equivalents, and investments. For a pre-revenue biotech company, having well over $500 million sitting in the bank is a massive, massive strategic advantage. Let's break down that cash flow. Their operating cash outflow was $39.5 million for the quarter. But here's the thing, they aren't just burning cash blindly, they are actively managing it. They raised an extra $20.2 million through their at-the-market equity program by selling roughly 568,000 shares. And get this, just by having that huge cash piles sitting in money market funds and U.S. Treasuries, they generated $6 million in interest income this quarter alone. Management has explicitly stated that this financial armor secures their runway all the way into 2028, giving them incredible flexibility. And finally, Section 5, the road to approval. Let's look at the timeline. Mineralys submitted their new drug application, or NDA, for Lorundrostat back in December of 2025. In Q1 2026, the FDA officially accepted that submission, and with that acceptance, they assigned a very critical target date, December 22nd, 2026. That December target date is known in the industry as the PDUFA date. Basically, it's the deadline for the FDA to finish reviewing the application and decide whether or not to approve the drug for commercial sale. For investors and for the company, this date is everything. It's the absolute finish line for the regulatory review and the starting gun for their commercial launch. Literally everything Mineralys is doing right now is oriented toward being ready to ship and sell on December 23rd. But in the meantime, the science doesn't just stop. They're maintaining their strategic flexibility by continuing their Transform-HTN open-label extension trial. This trial basically allows participants from the earlier pivotal trials to keep taking the drug. This is so smart because it constantly feeds the FDA even more long-term safety and efficacy data, which only strengthens their overall clinical profile as that PDUFA date approaches. So what should you take away from all this? Well, it boils down to this. With the clinical science largely validated across multiple trials, a massive $646 million war chest secured, and a firm date with the FDA officially on the calendar, Mineralys is definitely making all the right moves on paper. But as we know, execution is everything. Will Lorundrostat successfully navigate that final FDA review and become the vital new standard of care for the millions of people who are completely failing on today's hypertension meds? We're going to find out for sure this December. Thanks so much for joining me on this explainer. Keep your eyes on that PDUFA date, and I'll catch you in the next one.